This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Haidi Stroud-Watts. The top stories this hour. A positive lead-in for Asia, with US stocks climbing to all-time highs as the Iran ceasefire extension and positive earnings revive risk appetite.
SK Hynix reporting a five-fold jump in quarterly profit as it benefits from higher AI-driven demand and prices for its chips.
Tesla swinging to losses in late trade after increasing this year's capex spending to $25 billion, and IBM's earnings failing to shake investor concerns about AI disruption. But it is a strong lead overall that we're seeing coming from the US session overnight. Take a look at this is how we finished up. The S&P 500 up by 1%. We are still seeing that resilience, a swing back into AI related, back into tech related names. And this time it really is backed by the data, backed by these earnings numbers, right, that are continuing to impress. So Asian equities looking like we're going to get a pretty strong lead after that record close open in the US, but particularly we'll be focusing on these two tech heavy and AI chip related names in the region, Japan and Korean stocks. In particular, when it comes to Korea, looking like we'll see a very strong start when it comes to the Kospi index again. SK Hynix is in focus. That earnings beat, favourable prices for chips to continue in the long-term, medium-term warning when it comes to the capex number. We'll get a bit more on that later. But Paul, that's really going to be the main driver when it comes to these two key markets coming online.
Yeah, and the market really looking through all of this noise coming from Iran as well. It is very much the tech story that's driving things. And if we take a look at the oil price, what have we got at the moment? We've got Brent crude back above $100 a barrel, 101.91 at the moment for Brent. We've got the commodities complex more broadly performing pretty strongly. The Bloomberg commodity index climbing well, driven by oil, but we've got metals gaining also. Gold pulling back a little from where it was yesterday. As we look ahead to the open here in Australia, we are expecting to come off the boil a little by 0.25%. But to the point on commodities, we are going to be hearing from Santos today with sales numbers. Also, Fortescue is going to be out with a sales update as well. But it is technology, as you say, that is our top focus today. Investors continuing to bet on the AI and electric vehicle booms. South Korean memory chip maker SK Hynix has just reported record operating profit for the first quarter. IBM's software sales, though, failed to ease worries about AI disruption. And Tesla shares swung to losses as it revealed plans for a big jump in spending this year. So let's get into all these details with our team. We got Bloomberg's Min Lo, breaking news editor Andrew Mendez, and also senior reporter Dana Hull. Min, want to start with you for the big news of the hour. It was SK Hynix, just out with those numbers a short time ago. What were the key takeaways?
Yeah, an absolutely blowout quarter for SK Hynix. We're talking about a record for its net income, its operating profit, and its revenue as well. Net income in particular, we're talking about 40 trillion won. This is at least a third above the average analyst estimates. And to give you context, a year ago, they were looking at less than 7 trillion won. So it's more than a five-fold increase here. You talk about its revenue as well, 52 trillion won, also beating estimates. A year ago, it was just 17 trillion won, so a tripling of its revenue. And this is with the Iran war hanging over us, and still we are seeing such bullish demand. It's really benefiting from the capex spending cycles of these hyperscalers, which is pushing up the AI infrastructure build out, the demand for these high bandwidth memory chips. And so as it diversifies production resources to the HBM chips, we are seeing the shortage in the traditional chips like the NAND and the DRAM chips. That is giving SK Hynix immense pricing power. Average selling prices have been going up in the first quarter. That is boosting its margins as well. And that's why we saw those really, really strong numbers when it comes to net income. So certainly want to see how the stock performs when markets open later. It's already up 0.4% right now in the pre-market session.
Min Lo there on SK Hynix. And just to get you up to date with a couple of other tech stores that we're also following, ASML, the US listed shares falling after TSMC said the Dutch company's latest chip-making gear is too pricey to use. ASML's top lithography machines are valued at over $400 million apiece. TSMC says it will hold off on deploying them through 2029 to save money. TSMC's choices have a wide-ranging impact on the chip industry since it's the largest buyer of equipment and the biggest budget they have for new plants and gear. Alphabet shares edged higher in New York after its Google Cloud division debuted new AI chips and tools for building agents. The lineup comes in two versions, one for creating AI software, the other for running AI services after they've been created. The company is pushing to make it cheaper, less energy intensive to roll out AI software. Let's get to the other tech stories that we're watching. An IBM stock falling in late trading. First quarter earnings were in line with estimates, failed to shake investor concerns about AI disruption to its software business. Let's get more from our breaking news editor, Andrew Mendez. So, Andrew, investors weren't terribly convinced by what was otherwise a pretty robust set of numbers.
Yeah, they for sure were looking for a lot more coming from that specific sector. You know, there have been ongoing concerns with just how AI might disrupt the area, and overall, you know, despite numbers being well and being in line with what a lot of analysts and investors were saying, it really is just not doing it for anyone.
So if it's not doing it for anyone now, I mean, we heard from IBM saying, look, AI is a tailwind for global business. Why isn't the market not seeing it this way? And what's the outlook for the rest of the year?
Yeah, totally. I think when you look at how investors are looking at this specific sector, there is just a concern of where and how it'll be disrupted, despite the company, you know, really going heavy you know, having done acquisitions with Confluent, Red Hat, HashiCorp. They're just being in a way, you know, some investors are saying they're just being conservative with how they're conservative and cautious with just how they're going with it. You know, the company maintained its guidance from last quarter, and yeah, it's just people it's just the company being cautious, according to some investors.
All right, Bloomberg's breaking news editor Andrew Mendez there on the IBM earnings. Well, Tesla shares, meanwhile, swung to losses in extended trade as it revealed plans for $25 billion in capital expenditure this year. That's a $5 billion increase, and that came after quarterly earnings beat expectations, with demand for its electric vehicles rebounding worldwide. Senior Tesla reporter Dana Hull joins us now from San Francisco. Dana, let's start with that demand question. Things appear to be turning around for Tesla. Where's the demand coming from for EVs?
Well, they sort of nodded to the fact that high gas prices have kind of made consumers more interested in EVs again, and that they're seeing growing demand in core European markets, particularly France and Germany, and that more and more customers are liking their FSD offering. So we'll see, you know, how that goes as the year progresses, but they were signaling that demand has returned.
What about looking forward in terms of the capex spending? Seems to have investors, at least in the short term, a little bit worried.
Yeah, what was really interesting was that when the release dropped, the shares were trading up, and then as soon as the call began and they started talking, the shares dropped because they kind of revealed this eye-popping $25 billion capex spending plan, which is more than in the previous quarter. And this was a number that was not in the earnings deck. So, you know, Tesla is going to spend big this year on AI compute, on the Terafab, on their Terafab factory. They also announced that they're going to have to fix a lot of cars. Cars that have the hardware 3 are not really capable of FSD unsupervised. So there's going to be a lot of spending, and that figure, I think, has investors a little worried.
Worried how, though, Dana? Because, you know, Tesla's got a lot of ambitious plans. I mean, you mentioned some of them there, but also robotics as well. It's going to have to spend quite a lot of money to realize these, surely.
Right. I mean, $25 billion in a year, to spend $25 billion this year, that's an enormous outlay of capital. And I think that's why you're seeing, you know, sentiment after hours trending downward. We also still don't have a clear sense of the product timeline in terms of the vehicles. Like, going forward, it's all about Optimus, the robotics, and AI. There's not a lot of other vehicles in the pipeline. Musk said that long-term, the only car that will be manually driven is the next generation Roadster, which we may see a reveal of sometime later this spring, but that's not going to be a high-volume vehicle.
Our senior reporter there, Dana Hull, talking through those Tesla numbers with us in San Francisco. Of course, as I already mentioned, our key highlight today will be further gains seen in Korean stocks, and if there's any more excuses that the Kospi needs to extend that record high, given that it's already been propelled by this strong AI and chip story. We've also got macro data to back that up as well. The economy rebounding strongly at the start of this year. Export growth fueled by global demand for AI technology and chips. GDP growing 1.7% in the 3 months through to March from the previous quarter, reversing that contraction that we saw in the last quarter of 2025. Still, though, there are risks, some choppiness when it comes to momentum in recent quarters, consumer confidence falling to the lowest in 10 months just this last month, the ongoing geopolitical turbulence and obviously the impact of higher energy prices and commodities prices. But investors will just be seeing, no doubt, that top line growth story in addition to the AI boom story as well, Paul.
Well, still to come. Global trade in limbo as the US and Iran grapple for control of the Strait of Hormuz, seeking to gain leverage during an extended ceasefire. The latest geopolitical and market impact next. This is Bloomberg. Let's take a look at how risk assets are tracking at the moment. We've got crude prices a little bit softer as the, standoff, deadlock in the Gulf of Hormuz continues. S&P futures, meanwhile, opening slightly softer, off by about 0.1%. But as we look ahead to the trading day in Asia, looks like we're going to be having a very risk-on session. We just had some extremely strong numbers from SK Hynix, also a lot of tailwinds from those strong numbers from Tesla. So Asian battery makers could have a pretty good day as well. Let's get a little bit more on this from Bloomberg M-Life strategist Mark Cranfield joins us now. Mark, what are you watching out for today?
Yeah, I mean, as you say, those Hynix numbers are a real timely boost for everyone in Asia. This is a company which is very much in focus. It's alongside Samsung, TSMC. These are the big hitters in the Asian space in terms of this whole AI infrastructure story. Now, the important thing here from Hynix, that they did have a beat. That's good. But what investors will really be looking at is their projection forward. They're saying that they see continued high demand for their chips and elevated pricing. So they're confident they can continue to sell chips. It seems as though there's an insatiable demand for them at the moment, and people are willing to pay whatever price these companies like Hynix put on the deal. So for now, they're in a very, very strong position, and investors will be very keen to hear that. They also talked about spending more money, bigger capex, which has been a problem. We saw it towards the end of last year where people were pushing back against companies who were spending too much on AI expansion without delivering the results. But clearly for now, people like Hynix, TSMC, they are delivering great numbers. They are spending more. And for the moment, the focus is very much on let's enjoy the profits which are coming and not worry about the capex later. So for now, you can expect it to be a very good day for Asian tech stocks in general. We've seen a kind of a race here between the Kospi and the TAIEX index. Recently, it's the Taiwanese stocks which have been outperforming. This may well put the ball back into the Korean stocks, and they may start to outperform. But whatever it is, it's good for Asia, and you'll also see it spill over to some of the Japanese tech names who are in the similar kind of space, people like Tokyo Electron. So all in all, you would expect it to be a pretty decent day for the major companies in Asia.
The bifurcation of equity markets is really interesting at the moment, right? What's the rest of the market doing if you're not looking at AI, chips, software-related names or tech-related names?
You're not in the game. That's the thing about this can stay for quite a while. We've seen it before when Mag 7 was dominating the American markets for such a long period. Everybody else gets left behind. Of course, profitability is very important. We saw recently with the American banks' earnings, they were extremely good. So the financial sector has held up better than most. But you can see that investors are narrowing the field. They're focused on putting as much money as possible in the people that are winning and leaving behind the losers. That's a dangerous situation over the medium to long term. It's no problem for now. People would just go with the momentum. But yes, certainly, if you step back and you look at the breakdown, the number of companies who are above their 200-day moving averages, those who are below it, as that field narrows, it makes the risks higher when you do get a shock. So if suddenly things turn bad in the Middle East again, if the fighting resumes between the US and Iran and oil prices spike to numbers as high as we saw back in March, all bets are off and the market will unravel pretty fast. But for now, people are working on the assumption there is an uneasy standoff in the Middle East. It will continue for some time. Oil prices will stay high but manageable. People can see where it's going. Bond prices are somewhat under control. All in all, the backdrop for equities is relatively good as long as there's no more fighting in the Middle East.
Mark, we've kind of covered the good in terms of SK Hynix and related stocks, the indifferent, everything else. But what about the not so good? Because IBM gave us a bit of a case study today about anything with exposure to software not doing particularly well. What can we anticipate today for software stocks?
They did pretty well overnight in the US overall. And what we're getting also is a lot of very company-specific situations where investors will really punish a certain company, but it doesn't apply necessarily to the rest of the sector. So in the case of IBM, they may well find that they get lagged behind a long way compared to the rest. We recently saw it with ASML. ASML, the major Dutch company who supplies to a lot of these people like TSMC. There's a story we're running at the moment that TSMC is pushing back against ASML trying to raise prices on some of its products. But ASML is under pressure specifically because they didn't quite meet expectations recently and their stock is underperforming. And we've seen it before where Intel recently also, when they had a miss, their stock collapsed, but the rest of the market is doing fine. So you're getting some very specific situations where big companies, they can miss earnings for one quarter or they can be disappointing. They will get slammed, but the rest of the market can do quite nicely.
Bloomberg M Live strategist Mark Granville there as we look ahead. What's going to be another very interesting session here in Asia, particularly looking at those Taiwan and Korean markets. Well, in the meantime, of course, if you're looking outside of tech, the rest of the world is still grappled by the ongoing conflict in the Middle East, and the US and Iran are locked in a battle for control of the Strait of Hormuz after failing to meet for a fresh round of peace talks. The White House says President Trump has no firm deadline now to receive any new Iranian proposal.
The president has not set a deadline himself. Ultimately, he will dictate the timetable. And again, he is satisfied with the naval blockade, and he understands that Iran is in a very weak position, and the cards are in President Trump's hands right now.
Let's bring our politics editor Laura Davison. Laura, in the meantime, we've had Iran seize 2 ships. The White House doesn't seem particularly perturbed by that, saying, well, they're not American or Israeli vessels. There's no timeline now being set. What's going on? There doesn't seem to be a huge amount of urgency considering the waterway is still blocked.
Yes, we've really seen sort of what was a ceasefire that dealt with land is now, unclear if that really extends to the sea. We've seen a ratcheting up of tensions in the Strait of Hormuz with Iran firing on ships that are trying to pass, the U.S. seeking to seize Iranian flagged ships there. And so it's really not clear exactly what the game plan is going forward from here. Trump has, and the White House have pushed back on reports that there would be some sort of short-term deadline, 3 or 5 days, for example, to have some sort of new ceasefire. Trump has tried that multiple times of putting a deadline on Iran to come to the table for talks. That has repeatedly failed as recently as last weekend. When he tried to get Iran to come to the table, he was going to send J.D. Vance to Pakistan, and that really fell apart at the last minute. So you're, essentially kind of in a moment where each side is assessing the other's strength and weaknesses. The U.S. has maintained that, Iran's military is destroyed and they've been largely weakened. But we've seen time and time again, they've been able to use, sort of military adjacent or, really small and inexpensive tools to be able to fight relatively effectively. When that was both drones dealing with, with U.S. aircraft, but also now in the Strait of Hormuz using these small boats to fire on larger vessels that are passing through and able to do some damage. So this is, kind of a very tense situation, unclear where it presents, and this could be a very long, entrenched, slow-moving battle from here where there's no clear winner or loser.
Laura, in terms of these stalled negotiations, President Trump is blaming divisions among Iran's leadership for the delays. What's the evidence for this?
He, has suggested that, that their leadership has been weakened. We do know that many of the top leaders were killed in the early phases of this war, and there's been other people who have been elevated to fill the backslide there. However, there's also divisions within Trump's own leadership. Just announced that the Secretary of the Navy, John Phelan, was a close Trump ally, a big campaign donor, is leaving his post. The circumstances of his departure are really not clear, but he would really be in the hot seat right now, with sort of the Strait of Hormuz and the Navy's role being the key priority here. So I want to stress that we don't know exactly why he's leaving, if he's resigned or if he's been fired. But it's typically that you would not have a top person in a senior job like that, leave in the middle of a conflict like this without there being some conflict domestically at home within the Pentagon and within the administration.
All right, Bloomberg Politics editor Laura Davison there. Here's some of the top global headlines that we're following. US Treasury Secretary Scott Bessent says several Persian Gulf and Asian allies have requested currency swap lines amid pressure from the war in Iran. Traditionally set up between central banks, swap lines allow one nation to deploy the currency of another to address liquidity demands in that other currency.
Many of our Gulf allies have requested swap lines. You would have just read about the UAE, and swap lines, whether it's from the Federal Reserve or the Treasury, are to maintain order in the dollar funding markets and to prevent the sale of the U.S. assets in a disorderly way.
2 CIA agents have been killed in a car crash in Mexico following an operation to dismantle a drug lab. Mexican President Claudia Sheinbaum says her government was unaware of their involvement and describes the operation as a breach of security protocols. Mexico is now threatening to escalate tensions with Washington, saying all security matters must go through the federal government. We have more ahead on the Asia trade. This is Bloomberg.
Latest from the corporate front now, Lululemon has named former Nike executive Haidi O'Neill as its new chief executive starting in September. She takes over as the athletic apparel retailer faces slowing growth and investor unrest following recent product mishaps, including the sale of see-through leggings. Calvin McDonald, who had led the company since 2018, stepped down in January. Bloomberg's been told the Trump administration is nearing a $500 million bailout for Spirit Airlines. The deal would give the US government the option to take ownership of up to 90% of the carrier once it emerges from bankruptcy. President Trump says he's open to providing federal assistance.
Obviously, this is something the Commerce Department and the President are tracking. I don't have any updates or announcements, but the aviation industry is very important to this President and this White House. Millions of Americans depend on it. We want to see the best possible outcome, but I don't have any announcements.
Tencent and Alibaba are reported to be in discussions to invest in DeepSeek. Tech news outlet The Information says the deals would value the Chinese AI startup above $20 billion. DeepSeek made headlines in January last year when it released its breakthrough AI model. The popularity of open source models in China has made it hard for companies to translate their AI advances into profits.
Let's take a quick look at US cross assets. It was a very good day for US tech stocks. We've had the stocks in particular up by almost 3%. S&P at the last close was up 1% for the day. A little bit of weakness for the US dollar there. Futures opening a little bit softer by 0.1%. We've got the bond futures looking like this as well. The GOP Senator, Republican Tom Tillis, is blocking President Trump's nomination for Fed Chair, Kevin Warsh. He's wanting an end to the criminal investigation into Fed Chair Jerome Powell. We have more ahead on the Asia trade. This is Bloomberg.
Well, take a look at the state of play when it comes to energy pricing as we continue to see, is it a stalemate, is it a ceasefire? There's no deadline, according to President Trump, in terms of receiving another ceasefire proposal from Iran. But in the meantime, we'll have Iran seizing 2 ships. The White House doesn't seem terribly worried about that because they're not American or Israeli vessels, but the Strait of Hormuz, needless to say, remains very much deadlocked. New York traded crude, we are seeing downside of just about 0.5% there. Brent yet to come online there. We have seen a 3-day gain, though, for crude prices, given that we see the US and Iran remaining really locked in the battle for the control for the Strait of Hormuz after failing to meet up for that fresh round of peace talks in Islamabad. So continuing to see that rattling effect, desettling oil markets. When it comes to equities, no such sense of desettlement, particularly when it comes to AI and tech-related names. We've got the Nikkei 225 looking like we'll see some gains, but particularly Japanese semiconductor stocks could see a boost as well. They're already rebounding after last month's sell-off, but that potential spending from data center operators really seem to be outweighing the risks of the prolonged war. Let's bring Karen Young, who's a senior research scholar at Columbia University Center on Global Energy Policy. Karen, great to have you with us. And so we remain sort of mired in this scenario of deep uncertainty, right? There's a lot more commentators and experts talking about the possibility of really a forever war or, a frozen conflict where the ceasefire, now that President Trump is saying there is no deadline for that.
Yeah, it is the worst case scenario, I think, in many ways, certainly from a Gulf Arab state perspective, that we have a conflict that is still potentially very, very active, no real transit or security of transit of flows through the strait, and no real timeline for any kind of transition inside of Iran. So yes, we could be looking at a transition process inside of Iran that could take years, not weeks or months. And we're also getting into a timeline, we had the sort of 6-week thinking about resumption of flows. Now we're looking at a May 15th sort of 10-week resumption of flows in scenario building. And that's when we get into a much more sort of dangerous thinking in terms of, what are we doing with inventory draws, with lack of supply getting to customers, and the second order effects in inflationary pressure across any number of products, not just oil and gas and refined fuels.
Karen, even just a few days ago, it feels like market participants, the oil market certainly, were geared up for the strait to be reopened, right? Some sort of resumption to normal. And I know it feels like a fool's errand at the moment to ask anyone to be guessing at their possible scenarios. But what do you think are the likely scenarios at this point on how this proceeds? It either remains shut, it reopens, there are tolls being charged. What are you modelling at the moment?
Well, I think the 2 parties, the United States and Iran, are very far apart on demands. And if the Trump administration does not want to continue to militarily pressure Iran, Iran can handle economic pressure for some time. They've demonstrated this for years. And so, yes, it's painful, but it's something that they are willing to sustain. On the other hand, it's not clear that it's in America's interest, certainly long term, to increase this economic pain for the rest of the world. So that's going to be, I think, a decision point for the Trump administration. The other, possibility is that Trump makes a deal that leaves so many of the unsettling questions for the region unresolved, whether that's in missiles, drones, support for proxies, and certainly on Iran's highly enriched uranium stockpiles. So, if we get to a deal that looks even less stringent than the JCPOA, this is going to be really all for naught and a lot of pain that will take time to unwind in terms of product deliveries and the impact to our global economy.
Even if we look at this, Karen, from a best-case scenario perspective, that we get a rapid resolution to this, how long is it going to take before all the damaged infrastructure and trust as well can be repaired and oil prices begin to normalize?
I think we're looking well into 2027 in a best-case scenario. So in terms of just unwinding the damage. So that is to, of course, most importantly to Ras Laffan, that's going to take 3 to 5 years to restore that LNG production. But to refineries and to restart Oil production from shut-in wells, particularly in Kuwait and Iraq, could take 3 to 4 months in a best-case scenario. And I don't think you're going to see other producers, including Saudi Arabia and the UAE, jump to resumption of exports through the strait. The pipelines have been very effective. They may decide to stay just with those at those volumes and maybe add a little bit into exports to the strait as as the security situation allows. But I don't think any of these exporters among the GCC states and Iraq want to be the first movers, because if we have an incident where there are attacks on tankers, it just further deteriorates the insurance situation and the likelihood of customers really wanting to come in and load up quickly.
You mentioned how effective the pipelines have been as a workaround. Do you anticipate more investment in this sort of infrastructure like the Saudi East-West pipeline, or once this conflict is over, to just reduce dependency on the Strait of Hormuz?
I think we will. We're going to see probably parallel pipelines in Saudi Arabia under construction. This could take a couple of years. Of course, it will be expensive. And all countries are going to be thinking about their energy security, diversifying their supplies, diversifying where they keep their storage, where producers might also build refineries to be closer to consumers. And this is overall, I think, going to be an increasing pressure point on the price of energy.
Karen, in the meantime, it's a very different story when it comes to domestic oil production as well as stockpiles, right? This chart that I'm about to put up on the screen is so interesting to me because somehow the US has managed to both export record levels of crude but also add to its own crude inventories. How much of this war is really bolstering the case for US energy independence, even at a time that we're seeing pump prices really pressure US consumers?
It's true that U.S. production has increased slightly, but we're not in a position to be, producers of spare capacity. We're not taking over the Saudi role that's traditionally been played in the Gulf role for global markets. And so, yes, you might see a slight increase, and there should be opportunities to refill the Strategic Petroleum Reserve in the U.S. It was not in a good position. But that doesn't mean that we don't need energy products from the rest of the world, or that the rest of the world can depend on the United States to meet its needs. We are exporting now. It doesn't mean that we will be able to export at these volumes at 13 million barrels a day forever. And it will be private companies that decide where that production line goes.
The other beneficiary, of course, and if you have any, comments on whether US shale will be bolstered at this point to kind of ramp up production, but also when it comes to Russia also benefiting from those loosened restrictions, is that something that's likely now to continue, at least into the medium term, given that we don't have, at least what we can see, a quick resolution to the standoff?
So the Trump administration did let the waiver on Iranian exports expire on April 21st, but we still are seeing significant Russian outflows. The difference for Russia, and also true for Iran, but in terms of increasing its production and being more of a global source for oil, is that it doesn't attract investment. And that's not going to change in the near term either. So yes, Russia has benefited from this market and from shortages and from a more relaxed sanctions enforcement standpoint from the United States. But also they are not in a situation where they can become the spare capacity holder of the world. And I also have noticed that, Russia tightly controls not just what it is able to export, but some of its neighbors as well. So when we think about other countries that could be potential sources of additional production, like Kazakhstan, Russia has played a role there too.
All right, Karen Young, Senior Research Scholar at Columbia University. Thanks so much for joining us today. We do have more ahead on the Asia trade. This is Bloomberg. Let's check in on some of the stocks to watch when trade in Korea opens shortly. SK Hynix, it's been on a wild ride in the pre-markets. It's now up by about a third of 1%, but it was up about 6% at one point and then turned negative briefly. It's all over the park, but it was a good set of numbers. The company's net profit coming in at a record 40.3 trillion won. Very strong tailwind there from high chip prices thanks to a shortage of that product. If you like these numbers in US dollars, that's about 28 billion net profit. That's back of the envelope for SK Hynix. So a very strong first quarter result there. We're also going to be watching Samsung Electronics as well. Might be catching a tailwind from that result, and also one of Samsung's subsidiaries, Samsung SDI, makes batteries. Could be in for a good day as well off the back of some strong Tesla earnings. Now we've got Hyundai Motor reporting results today as well. This is after announcing plans to boost US production and cut costs to counter tariffs hitting its biggest market. We're anticipating an operating profit of 2.81 trillion won. That is approximately $1.92 billion. Sales expected to come in at about 46 trillion won as well. We've got 32 buys, 4 holds and 0 sells on Hyundai. So we'll anticipate those numbers around about midday Korea time. Heidi.
Yeah, battery makers, EV-related names are front and center, right? Paul Lijun, who's the chairman and founder of the Chinese battery maker Gotion High-Tech, says he expects overseas growth to double this year. Speaking exclusively to Bloomberg, Li also discussed expanding production in the US and the impact of the war in Iran.
Actually, yes, there are some delays. For example, our exports used to be able to be shipped across the Mediterranean Sea, but now we have to go around the Cape of Good Hope, which definitely adds about half a month to the transportation time. Wars certainly have some negative impacts on our industrial development. We hope to end the war as soon as possible and restore peace. We also hope that the development of our new energy industry will gradually reduce or even eliminate the era of fighting for oil in the future.
So are you actively seeking to expand production in the U.S. right now?
Yes.
The IRA has come up with a compliance deadline by 2027 for battery components to be free of foreign entity of concern. Are your plants in the U.S. at risk of non-compliance?
This is an excellent question. Indeed, with the enactment of this legislation and other laws in the U.S., the requirements for domestic production in the U.S. are becoming increasingly stringent. This is understandable. A country simply wants to build its domestic supply chain system to ensure the orderly development of the industry and support the overall development of its economy. I think this is perfectly understandable. Now that we have established battery manufacturing companies, meeting this demand 100% is still very challenging. For example, there are some materials that the U.S. cannot yet manufacture, and we still need the guarantee of the global supply chain. There may be some increased costs in terms of taxation, but I believe that in the future, with the development of the entire industry, the construction of the supply chain system, the continuous expansion of market demand, government policy support, and considerable efforts, these problems will be gradually resolved.
What is your projection for domestic and overseas demand growth for Gotion this year?
Our growth rate will be 70% higher than last year. Overseas growth is expected to double.
That's Li Zhen, the chairman and founder of Gotion High-Tech, speaking to Bloomberg's Min Min Lo. You can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more. It's all in one place. You can check it out at bloomberg.com/videos. We have more ahead on the Asia trade. This is Bloomberg. All right, let's take a look at how the commodities complex is tracking at the moment. Obviously getting a very strong tailwind from crude prices, although they are coming off the boil just a tad. 92.50 for New York crude at the moment. There's a whole lot of nothing going on in the Gulf of Hormuz in terms of progress. There is a deadlock, neither side showing any sign of willing to lift their respective blockades, and no sign of any talks on the horizon either. We do have iron ore prices coming off the boil a little bit as well, 106.80 a ton. We're waiting on some sales numbers for Fortescue a little bit later on. But even though we see a little bit of weakness across the board in the commodities complex, the Bloomberg Commodity Index is it's going from strength to strength, strongly driven by those oil prices, with metals giving a tailwind as well. Well, the US National Economic Council Director Kevin Hassett says he's confident the disruption to energy markets from the Iran war will be temporary. Speaking at the Bloomberg Global Markets and Banking Summit, he told us President Trump launched the war because of specific warnings about Iran obtaining nuclear weapons.
Steve Witkoff and Jared were negotiating with the Iranians on their nuclear program, and started getting very chilling threats about how quickly the Iranians were going to have 11 nuclear bombs, is what they told them. And the president made the judgment that a nuclear Iran can happen. And I think we all agree that having a potentially suicidal country with nuclear weapons that has said that it wants to destroy America, destroy Israel, is not really acceptable. And so on the economy, we're of course aware of the short-term disruption in energy markets, confident that it will be a short-term disruption, but understand that people are frustrated when they look at gas prices right now. The one thing I can say, though, is that in terms of affordability, that President Trump has organized the economic team to do every single thing it can to reduce the prices of things. And it's astonishing how much progress we've made on that. Top line core CPI was 0.2, but it rounded up to 0.2 in the last release, and the 2.6 average over the last 6 months is the lowest it's been since before the inflation began under the previous president. And the thing that I like to remind people is that's true. The inflation's going down towards target because of macroeconomic factors, like we reduced the deficit last year in 1 year by $400 billion, which is a lot. But also because of many specific policies that President Trump has advocated and we've pursued. So, for example, the drug prices are declining because of the Trump RX and other factors, the most favored nation stuff. When I came in, you probably remember, if you guys watched me on TV the first 2 or 3 weeks, the only thing anyone ever wanted to ask me about was the price of eggs. Do you remember this?
These days it's gas prices, though.
Okay, but we found that the Biden administration was mismanaging the avian flu. We fixed, with Brooke Rollins' help and all of our team, that problem. And I literally just had a farm group come to my office complaining about low egg prices. We opened the border for beef. We could go on, but I think that the affordability agenda of the president has been successful, but for sure the short-term disruption for gas prices is something that we're aware is distracting for people.
And do you expect to see $3 gas or gas in the $3 range anytime soon?
Yeah, I think that obviously I'm not going to predict the outcome of ongoing negotiations or even try to, inadvertently shed light on those, because it's, best left to negotiators. But the fact is that if the Strait's open, that oil production can pick up really quickly.
US National Economic Council Director Kevin Hassett there speaking to Salehi Hermosen at the Bloomberg Global Markets and Banking Summit. Well, exclusive interviews and data collected from nearly 24 law enforcement agencies across the US reveal how AI has made it easier for pedophiles to create illegal sexual images of kids, overwhelming child safety investigators and putting children in danger in the real world. For more on today's Bloomberg Big Take, let's bring our tech reporter Riley Griffin. And Riley, this is a hugely important and incredibly disturbing story. And what it essentially has found is that AI technology has supercharged child predators.
Yeah, it's a hard one to report and a hard one to read, but an incredibly important story. We have heard from 24 units focused on child safety that they are just absolutely overwhelmed as AI makes tools for manipulating photos of children much easier to produce. And as these tips come into their offices in a way that is surging, some places reporting more than an 11-fold increase since 2019, budgets have remained stagnant, meaning they don't have the resources to pursue the cases at the depth that they would like to.
Well, we've also got a situation where media and tech companies are also relying on AI to find and report this kind of material, but your story also gets into the details of how that can be problematic as well, right?
Yeah, it's an important point here. Companies have turned to AI to reduce costs, create efficiencies, and reduce the trauma for content moderators who have to look through this kind of material. But the result is that they're passing along tons of dead-end tips, things that really aren't considered child sexual abuse material. And that is gumming up the process of investigators looking for real children. Every case they have to review. And ultimately what that means is that the time that they spend looking at dead-end tips is time that they can't spend pursuing children who are facing hands-on abuse actively.
And resourcing is a real issue, right? Because so much of this, as you say, takes up the time at a time when there's clearly not enough funding for law enforcement to be able to fight these new types of technological crimes that are now overlapping into real life crimes. Is there any progress being made when it comes to resourcing?
No, and to put this in perspective, the ICACs, the Internet Crimes Against Children task forces that do this work, they typically in a year get about $30 to $40 million. That's about a day of spending for the FBI. So it's not a lot of money going to local law enforcement. It hasn't increased drastically over the last 5 years, despite pleas from local law enforcement saying they need help to be able to tackle this modern issue.
Ms. Riley Griffin, Bloomberg tech reporter, one of the journalists behind the big take story on how AI has made it easier for pedophiles to create illegal sexual images of kids, flooding underfunded child safety investigators with tips and putting children in danger. As Riley said, a terribly difficult one to report on, very hard to read, but an important piece. Market opens. Sydney, Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We are counting down to Asia's major market opens. And Heidi, what an open we're anticipating here. You'd almost forget that there's, well, almost World War III potentially breaking out in the Gulf.
And that's just a weird situation too, right? Because you've now got President Trump saying that there is no deadline for a ceasefire proposal to come from Iran. The Strait remains blocked. We've got Iran seizing a couple of vessels, but it's apparently not such a big problem when they're not American or Israeli vessels. So the volatility or perceived volatility seems to have come right down. And at least when you take a look at the tech, the AI, the chip sectors of this market that are just flying.
Absolutely, and alternative energy as well. And we got a case study of that also out of the US today with those Tesla earnings surprising everyone. And that may have a bit of momentum going forward also as, well, motorists look to alternatives, electrically powered ones. So let's take a look at how we're going. In the early going, unsurprising, we're seeing the Nikkei gaining straight out of the gate. We're better by about 0.25% there. We're keeping an eye on some of those chip-related names as well, the likes of Tokyo Electron, just checking in on Kioxia Holdings for you. I don't have trading numbers for that yet, but we are expecting a good day for tech. We've also got the yen, very soft. It continues to be quite appealing in terms of carry, knocking on the door of 160 again. We'll be getting there, that level where we keep an eye out for a potential intervention from the Ministry of Finance as well. The topic's a little bit softer at the moment, off by about 1/5 of 1%. Let's get to the main event, though, which is the Korean market. We are seeing some gains for the Kospi, again, better by 1.2%. Samsung Electronics better by 2.3%. Interesting, though, to watch the fortunes of SK Hynix. It was very volatile in the pre-market. It was up more than 6% at one point. Right now it's looking kind of flat, but we had a pretty decent set of numbers from the chip manufacturer, particularly on the sales side, thanks to the insatiable demand for memory prices. So let's get into those numbers a little bit more now with Min Min Lo. Min Min, talk us through the highlights.
Yeah, it seems like investors are not quite impressed by the really blowout earnings that we saw. We are talking about revenue, operational profits, net profits, all beating estimates. I'm looking at about 40 trillion here on a terminal when it comes to net profit. This is a 5-fold increase. Last year, it was less than 7 trillion, also beating estimates by a very wide margin, at least a third above what average analyst estimates had been. You look at revenue as well, 52 trillion yuan. This is a tripling of their revenue. And again, we have been seeing this huge capex spending by the hyperscalers that is pushing up those AI chips demand, and SK Hynix is benefiting from that. It is also eating into supply of the traditional chips like the DRAM and the NAND chips. That is pushing prices up on that front. Its average selling prices have been going up. Margins are really high, and so we are seeing a very, very strong quarterly earnings here. Certainly a lot to watch out for when we get to the earnings call.
Hynix shares have been very volatile so far this morning, but they've climbed about, 90% this year, more than tripled in 2025. We know a bit about the plan to spend on capex. What else are we watching for in the earnings call?
Yeah, we want to get a little bit more details on the capex because the company did say it was going to be higher than last year's 30 trillion won, but we haven't got the exact range in terms of how much they are going to increase it. Some analysts are looking at maybe a 45% increase. They had previously pledged to buy at least about $8 billion worth of those advanced lithography, ultraviolet lithography machines from ASML as it looks to expand capacity both in South Korea and in the US as well. What else we're watching for is, of course, how it's going to maintain its lead in these advanced chips, because Samsung seems to be pulling ahead when it comes to the most advanced HBM4 chips. They showcased their products at NVIDIA's GTC event. They were the first to commercially ship these HBM4 chips as well. And we are also looking out for any commentary around any challenges the company might be facing, because in February, the company said that losses could still be a possibility just given how fast the pace of these technological shifts. And they also talked about infrastructural challenges and how SK Group would be looking to invest in building out not just data centers but power plants as well. And SK Group mentioning that any shortage in energy and shortfall in energy is going to be disastrous for the company.
Makes Min Min know there. And as Min Min mentioned, when it comes to some of the advantage that is being held by Samsung, it comes at a time we're also seeing Samsung shares rising 3.2% at the moment to a record. That's boosting a Kospi index that probably didn't even really need that boost, given how fast and far we've seen those gains on the Kospi on the back of some of these chip makers. We're seeing another addition of 1.5% there at the moment. Let's also take a look at one of the other markets coming online this hour, which is, of course, Australia. And typically fewer tech names. There's certainly not a lot of the chip names to have anything to do with Australia. So we are seeing downside. And that's also driven by the fact that we're seeing a lot of those energy names, oil and gas stocks being listed here as well. When it comes to oil, we are seeing a little bit of downside there for Brent crude, tracking the slight downside that we see in WTI as well. But over that 3-day basis, we are seeing crude continuing to hold on to those gains. Everything that's going on or not going on when it comes to this ceasefire very much playing out there. Let's get some market perspectives with Greg Calnon, who's a global head of public investing at Goldman Sachs Asset Management. So just in the last few minutes or so, we kind of painted the picture of that bifurcation of these markets, right? On the one hand, really the revival of the memory chip trade that continues to drive markets like Korea, even Japan, where you are, with the semiconductor names being listed there, to new highs. On the other hand, the macro picture is still holds the potential to be so dire.
Yeah, that's right. And it's good to be with both of you. Thank you for having me. I'd like to point out, I think it's a very exciting time to be here in Tokyo. I've met with a number of clients and large asset allocators. And this question that you're asking me is the question that we've been dealing with and getting from clients really over the last couple of days. How can it possibly be that we have a war in Iran? We have fallout still continuing from AI winners and losers. We still have some questions around private credit. And yet, markets continue to grind higher. And I would say there's really three reasons for this, and maybe I'd center them a bit from a U.S. perspective, but I would say they apply more globally as well. The first is that the economy in the U.S. continues to do quite well, right? We'll have 2% GDP growth this year. We have a Fed that's expected to cut 2 more times throughout the rest of the year. And so the economy is generally doing pretty well. The big driver, I would say, though, is the corporate sector and corporate earnings more generally. It's expected that we'll have 12% earnings growth this quarter, which will be the 6th consecutive quarter of double-digit earnings growth. That is real momentum in the corporate market. We also have record buybacks. We have a 100% increase in M&A volume. There's a lot of momentum within the corporate sector. And so the obvious big risk is, does this ceasefire hold? Does the Strait reopen within a couple of weeks? But if it does, which is what the market is pricing in, then I think you can see some calm be restored back to the markets, which I think is what we're seeing today.
And to be fair, we talk about dislocation, but there are many elements of the AI story that very much rely on the availability and the well pricing of energy and commodities, right? You're in Tokyo, you're obviously in region. What opportunities specifically do you see when it comes to these markets that you're close to right now?
Look, I think there's a lot of opportunity. Many clients are asking if there's actually been less of an acceleration within the AI tech trade over the last couple of months. And maybe this is an opportunity to re-enter, right? If 40% of S&P earnings are coming from AI infrastructure investment more generally, there's more room to run here. So that's certainly one area where clients are very focused. I would say that the broadening of equity markets more generally is another topic that's coming up in many of our conversations. And so talk about EM and is there more opportunity in both EM equity and EM debt. Talk about, small cap in the US more generally as another opportunity. And then I'd say that clients are also still focused on, the actual reality of the situation where there does feel like there's more risk in the world. And so how do you protect the tails? How do you think about downside protection? How do you think about income? How do you think about, pulling that all together in a way that builds a diversified portfolio? And so I think there's a lot of interesting topics and dynamics that clients are very focused on right now.
Greg, would you include in that pile battery makers, alternative energy as well? Because if we take a look at this chart on the Bloomberg, I'll describe it for you. We've got Korean battery makers in particular performing extremely strongly. What's your outlook for this sector as the war drags on and consumers potentially down the track feel a bit bruised by their experience at the petrol pump?
Look, I think there will be a lot of questions that come from the Strait of Hormuz being closed for, whatever it is now, 4 to 6 weeks, right? And so when you have that issue where you can still have energy markets be, deeply affected by geopolitical risks, there's a lot of exploration into alternative energy sources, whether it's batteries, like you're talking about here, whether there's other opportunities to think through, how do you get petrofuels out of the region of the Middle East? I think that's another area that there's going to be continued discussion, but this momentum towards alternative energy has been in place before the war. It will continue to persist after, and in fact, I would say there's going to be significant acceleration as a result of it. So we do think there's momentum in the battery trade, as you just outlined as well.
Now also the war in the Gulf does lead to questions about inflation. And I know you describe inflation pressures as temporary, but I'd offer the observation that temporary sits very close to transitory in the dictionary. What's your outlook for inflation going forward?
Yeah, this is the big if question, right? So if if the Strait reopens in the next couple of weeks, we'll continue to see higher oil throughout the rest of the year. We'll continue to see inflation pick up. But I do think that the market has the ability to look through that, right? And so our estimate is that inflation does pick up throughout the rest of the year, certainly headline, core maybe to a little bit as well. But we do think that this is, something that the market has a strong ability to look through over time, again, managing through these risks that we obviously have today.
Nikkei 225, you've brought some luck with you, Greg, to Tokyo, rising above 60,000, that level for the first time on record. So we continue to see really this level of exuberance. And even as I say that, I wanted to get your take as to whether it is exuberance, whether this AI and chip-driven rally that we see in these markets, is it still cyclical? Is it still sort of being looked at and traded as a commodity that's tied to these sort of boom-bust cycles? Or do you think it's kind of shifted into something more fundamental than that?
Look, the AI theme and the investment around AI is a real trend, and there has real momentum behind it. So we do think that this persists. We don't think that it's exuberance at this point. There's a lot of investment that's being made around the entire ecosystem of AI, from the chips themselves to the power sources related to the data centers. There's just a whole host of areas that are affected by AI, and that will continue to persist. I think what remains to be seen is sort of how long that this plays out. But from our perspective, if you look at the amount of investment in AI, which, if you just look at the hyperscalers themselves, they've estimated to be investing, close to $1 trillion into the infrastructure associated with AI over the coming years. That is a significant number that will have massive impacts across the world. And so that number will continue to flow through markets in a variety of different ways, and will keep a lot of momentum there.
All right, Greg Calnon, Global Head of Public Investing at Goldman Sachs Asset Management. Thanks so much for your time this morning. Let's take a look at how some of these key movers are doing. We've had SK Hynix now flip back to gains. It's been a bit of a roller coaster this morning for that stock. We're better by almost 2% now. Haidi made the point earlier about its performance year to date. It's up something like 90%, and over the course of the year up by more than 500%. So it's been an extraordinary ride for that stock, and the first quarter earnings today suggest there is more to come. Samsung also at a record. We've got Samsung shares now better by about 3.5% as well, but the tech sector more broadly performing pretty well here. We've also got Google announcing it's launching a couple of TPUs. These are tensor processing units designed to make AI computing faster and more efficient. That propelled tech stocks in the US to a high during that session. Google also announcing a $750 million fund to help boost corporate AI adoption, showcasing some tools for building agents as well. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at these markets as we continue to see Asian equities just pushing higher. So much of this being driven, of course, by what we see in the Kospi in Japanese markets as well, seeing those semiconductor names continuing to climb. The Kospi is headed higher in early Thursday action. That earnings beat by SK Hynix, despite some choppy trading in Hynix itself. Also, a pretty strong print for the first quarter GDP numbers are helping support. We're also seeing Samsung trading strongly as well, setting yet another record high. We are also seeing that strength in Japan with some foreign inflows to Japanese equities there as well. Oil, though, we're holding those gains for 3 days, but at the moment we are seeing not much of a change when it comes to oil prices, because there's not much of a change when it comes to this situation with the ceasefire or truce. The US and Iran are still locked in this battle for control of the Strait of Hormuz, failing to meet for a fresh round of peace talks. The White House says President Trump has no firm deadline to receive any new Iranian proposal.
The president has not set a deadline himself. Ultimately, he will dictate the timetable. And again, he is satisfied with the naval blockade, and he understands that Iran is in a very weak position, and the cards are in President Trump's hands right now.
Let's bring our politics editor, Laura Davison. So, Laura, it's really unclear as to the longevity of this stalemate, right? Because there is no deadline. There seems to be no strong drivers at the moment. At the same time, you're seeing Iran seizing non-US and non-Israeli vessels in the Strait.
Yes, this is really kind of a different moment than we found ourselves really at any point in this war. And even, just a stark contrast from a week ago where there was a lot of optimism that the two sides would meet again in Pakistan for talks. Those fell apart over the weekend, and it's now not clear, when anything might happen. Trump has not put a deadline on sort of this next phase of the war. He's repeatedly done that of putting, deadlines of a couple days to a couple weeks. That has not really worked out for him. So now we're seeing sort of this indefinite period where both the U.S. and Iran are sort of testing out their influence and military capability in the Strait. You're seeing Iran fire on some ships in the Strait. Not necessarily Israeli or U.S. ships, but a sense that they have pretty firm control there. The U.S. is also their military blockade just outside the Strait has been able to intercept several Iranian flagged ships. So this is kind of the new phase of the war. It has moved from sort of a bombing campaign in Iran to now being sort of a conflict on the sea. And where this goes from here is not at all clear. Trump has suggested that he still thinks a deal is possible, could come together. There are still setups in Islamabad if the parties were to meet. But Iran has suggested it's not interested in meeting anytime soon, especially while the U.S. continues to lob threats. There's also divisions within Iranians' top leaders, as you kind of have different factions forming there. So just a lot of unknowns and what could really be settling in for an entrenched conflict.
Yeah, Laura, you mentioned changes or uncertainty around the leadership in Iran. There's also been a change in leadership for the U.S. Navy as well. What do we know?
Yes, so John Phelan, who is the head of the Navy, he is leaving his post effective immediately. This is a pretty abrupt departure. It's not clear if he resigned of his own accord or if he was forced out. But this is a really, really important moment for the Navy. It is really sort of at the center of all the action with the naval blockade in the Strait of Hormuz. That's where sort of all the military might is focused. There's even additional carriers that are heading to the region in transit over the ocean right now. So the fact that he's leaving at this critical juncture suggests that there are also divisions at the Pentagon, fights between top generals, top Trump appointees, and this could again spell potentially a shift in U.S. strategy here in the coming days or weeks after Phelan's departure.
All right, Bloomberg Politics editor Laura Davison in Singapore. Let's take a look at how oil prices are tracking. Meanwhile, against the backdrop of this deadlock in the Gulf of Hormuz, we have Brent back above $100 a barrel, 103.35 at the moment. European natural gas futures are also rising. Gold slipping a little bit. Let's get a little bit more on the oil price with Stephen Stapczynski, who leads our Asia energy coverage. And Stephen, we have seen oil trading at a pretty tight range, but we're back above 100 now for Brent. Is there a risk of a breakout here?
I think what the market is beginning to price in is a more prolonged closure of Hormuz. I think we're in this strange territory, as we just heard previously, that it doesn't really seem like either side has a strict deadline as to how long the ceasefire will continue. Trump hasn't really set a deadline either, which is a bit of a different strategy. So because of that, traders are trying to navigate exactly the physical market. And the fact of the matter is, the Strait of Hormuz remains shut to most traffic. You're seeing essentially a halt of about 20% of both seaborne oil and liquefied natural gas shipments globally, and that's beginning to tighten the supply on the water. So before, you had a few levers that you could pull to kind of ease things. You had the U.S. put waivers out on sanctioned Russian oil. There were about 20 million barrels of that on the water in the middle of February. Now we're down to maybe 3 million barrels. At the same time, there were some Iranian shipments outside of the Persian Gulf that maybe some buyers could grab with waivers from the United States. Those supplies are also beginning to tighten. So as you lose this storage, you're also effectively looking at less supply coming out of the Middle East, and that's resulting in premiums for refiners, especially those in South Asia and Asia more broadly. But India is bearing the brunt of it as they're a major consumer, and they're unable to find alternatives. So I think think there is that worry. The one caveat, of course, is it's just this, right? The ceasefire is continuing. There are no attacks on infrastructure. That was the main worry in March, as you saw Iran hit infrastructure in Saudi Arabia, in Qatar, and other places. Those attacks risk that even if Hormuz were to open, it would take longer, months, weeks, months, years for some of this infrastructure to come back online because they would need repairs. So that's why we're not seeing oil at 120. Instead, we're more around the $100 level.
Stephen, we were looking at this chart that's on the screen at the moment that shows the EIA data when it comes to the US crude situation, right? And it's, on the headlines, it's surprising. We saw stockpiles surging to the highest since 2023. We saw exports as well, right, rising to a record. Is this as strong as the numbers would make it look?
I mean, it really, I think if I were the Trump administration looking at these numbers, it would make you feel pretty good. The U.S., the shale boom over the last decade, 2 decades, has done enormous things for the U.S. position when it comes to its ability to be energy sufficient. And I think that this is a great example. Not only are they able to export more, but they're also at the same time able to increase the storage that they have. Of course, there is a level of demand destruction in the United States. With gasoline prices at $4, that's the highest level in 4 years, basically. That is probably reducing a lot of families' ability to go on large trips. Maybe people are deciding to stay home instead of traveling, taking public transportation. But that all being said, it does put the Trump administration and the U.S. in a position if they think that they can weather higher gasoline prices, because the risk of a shortage to the U.S. is nil. There is going to be no shortage just because there's so much supply. The only issue is because of WTI's connection with global markets, because the U.S. still does import some products, it will mean that higher prices for consumers. So how long, what's the pain threshold Trump has for this inflationary pressure, and how long will the voters and the folks in the United States be able to withstand this before you see the Trump administration really pull back and try to tame and taper oil prices?
Bloomberg, Stephen Sepczynski, who leads our Asia energy coverage there in Singapore with us. More ahead on the Asia trade. This is Bloomberg.
Right, let's take a look at some of the movers that we're watching at the moment. We've got SoftBank at a record, better than 6.5% right now. SoftBank is also appointing ARM Holdings chief Rene Haas to lead its international operations, and this is part of Masayoshi Son's push into AI chip making. Makino Milling, this is another stock we're watching. It's off 7.5% right now. This is after the Japanese government has asked the equity firm MBK Partners, this is a Korean firm, to cancel its planned acquisition of Makino Milling. This is due to national security concerns. So that stock suffering a little bit in the early going in Japan. A couple of battery stocks there that we're watching as well. LG Energy Solutions, Samsung SDI coming off the boil a little bit, but this is despite the very strong set of numbers out of Tesla, and Tesla saying that also plans to boost spending to $25 billion in AI and robotics as it pushes to expand into a range of new key products. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at some data just crossing the Bloomberg at a session that's really being dominated by this AI chip-related rally. But at the moment, we're also seeing April preliminary PMIs coming through for Japan. Manufacturing PMI coming in at 54.9. Still a lot of strength there being seen when it comes to expansionary territory. Composite PMI coming in at 52.4. The services PMI a little bit softer at 51.2. But Paul, we do have some breaking news.
Yeah, this is relating to SoftBank, which I mentioned a moment ago, hitting a record. We have a Bloomberg scoop for you here. SoftBank is said to be seeking a $10 billion margin loan, which is backed by its shares in OpenAI. This is according to people familiar with the matter. SoftBank looking to take on more debt as it pushes into AI. This would be a 2-year margin loan and carry an option for SoftBank to extend that borrowing by an additional year as well. This is according to sources. A SoftBank representative has declined to comment on this story. Now let's take a look at SK Hynix as well, now surging in Korean trade. We've got it better by 3.5%. It's been a bit whippy this morning, but now seems to be finding a range. Of course, came up with earnings, a 5-fold jump in quarterly profit. Plans to increase capex significantly as well this year due to the surging price of memory chips, and it was a big jump in sales due to those higher prices, which has helped propel SK Hynix to a very, very strong set of numbers indeed. Let's get across to Tom Kang now, Research Director at Counterpoint. Tom, thanks so much for joining us. I just wondered what your key takeaways from those SK Hynix numbers were.
Well, the numbers are very surprising. SK Hynix, we thought they would report record earnings, and they did, but it was much higher than we expected. So we were expecting 50 trillion, but they did more than that. And the profit is amazing, 37 trillion Korean won. So this trend we see coming from AI is affecting the memory market a lot, and SK Hynix is benefiting the most, we can see.
Talk to us about the capex story as well, because SK Hynix setting aside a significant sum here also.
Right. So SK Hynix, they were reluctant in the beginning of the year because they weren't sure if this AI boom was here to stay or would go away. And it's a risky move to invest. But now they made the decision that they have to invest because AI companies like OpenAI and Anthropic have been showing good revenue numbers now. And so it looks like the AI trend is real and it's generating revenue. And there's another factor. They see CXMT, their largest Chinese competitor, investing heavily. And so they're feeling the heat. So they made the decision to invest in capex. And this will be a big change for the memory industry.
Tom, it's interesting, everyone's still calling this a trend, right? Do you see a situation where we're starting to see chip and memory stocks not being traded and treated like a commodity anymore and not being susceptible to the usual kind of boom-bust cycle that we might see? They seem a lot more intrinsically tied to AI companies, AI accelerator projects, and those prospects.
Well, this is a big super cycle, and it's lasting longer than we expected. Actually, if we look at the Q2 contract prices, they're still rising. So it's not going away, and we've never seen such a cycle being extended to such a long period. But definitely, the memory market is cyclical. There are ups and downs. We just have longer cycles sometimes. So the downturn will definitely happen, but it will probably happen at a time we never expect. But you can say that the need for memory from the AI side is going to continue. But as you see, companies like SK Hynix invest more, and then companies like CXMT from China invest even more. There will, at a certain moment, be oversupply in the industry, and that's what everyone is fearing. But the problem is no one knows, and it doesn't seem to be coming this year or even early next year. So they've made decisions to invest with confidence.
You've mentioned one of the challenges being China. The other one, obviously, in a broadly macro sense, is what's going on in the Middle East. You've said that it's minimal, the disruption. Do you see a situation where the commodities price pressure, the energy price pressure starts to have an impact on these foundries, on production and costs?
Yes, of course, the crisis in the Middle East is going to be a worldwide problem. And actually, oil prices are very important because this is linked to electricity, power. And power is very important for AI. So right now, it's not just memory that's in shortage, it's power. It's electricity that's also in a very tricky situation where demand is exceeding supply. So if oil prices go up and if energy prices go up, it will affect the AI industry, and then AI companies will have to slow down, and that could affect the memory industry. But right now, it's not just AI. We see demand for better memory in PCs, mobile, everywhere. So there could be some impact, but unless the oil prices go beyond 120 per barrel, it won't slow down the AI boom right now.
In terms of SK Hynix, it's just been an incredible 12 months, really. That stock is up by more than 570% on year and about 90% year to date. How much more upside do you see for SK Hynix? Do you have a target for the year end?
Right. So the surprise we see in the Q1 numbers comes from the fact that the long-term contract prices were not rising in January, but it started to rise in February. So companies like Apple, Samsung, Huawei, Motorola, they make long-term contracts. The long-term contract prices started to rise in February, and we saw this rise rapidly in March. And that was the extra margin, the extra profit that SK Hynix earned in Q1. So we see this continuing in April. According to our price tracking, in April, the prices are rising even more. So it's not slowing down. So we expect a better Q2. So the profits, the Q1 profits are actually going to be smaller than the Q2 or Q3 and Q4. So I can just say that till the end of this year, there's definitely a lot of upside for SK Hynix.
Tom, always great to chat with you. Tom Gunn, who's a research director at Counterpoint. Well, Citadel Security says the company's use of artificial intelligence is growing, but so are the costs to power it. Speaking at the Bloomberg Global Markets and Banking Summit, President Jim Esposito told us that Citadel gets a healthy return on its investment in AI.
Look, I think sometimes what you pick up from us when you talk about AI, it's not new. We were a company founded roughly 25 years ago, basically with the principles that technology is a force for good. We levered technology from day one. We were using large language models and machine learning before most people knew what those things were. And so I think when you talk to us, it's kind of like obvious that those things can have a big, big impact on market making. To your question, yes, we continue to make strides and advances incorporating agentic AI into our business. Look, at a high level, what I would say is in any business, but especially ours, speed matters. Speed to market probably matters more than ever before. What I'm finding is we're getting faster and faster at all the things we need to do. Think about the flow that comes through our platform. We run some very large, very complicated risk management models. In prior years, we would re-underwrite, we would tweak our large risk models a couple times a year, maybe 3 at best, 4 times a year. It was a labor-intensive process. It required enormous computing power to re-underwrite and tweak these models. Every time we did that, we'd give a better price to a client. That would fall to our bottom line, so it was worth doing. Now, with the advances in computing power and AI, order of magnitude, we can re-underwrite those models about 12 times a year. So yes, AI continues to have a big impact, and potentially now it's accelerating.
So the improvements in the client experience, yes, in theory, should flow through to the bottom line. But the cost of compute is, as we hear from so many players, whether they're in your business or whether they're in other businesses, is becoming, is not only rising, but is becoming such a growing requirement. Does it balance out? Is the investment in compute still worth it for what you get to the bottom line?
It's a good question, and you're absolutely right. There is a bit of an arms race right now from financial players around computing power, TPUs specifically. Our spend has been increasing. At the moment, we're getting a healthy return on that spend.
That's Citadel Securities President Jim Esposito speaking with Bloomberg's Eric Shakska there. Here's the top corporate stories that we're tracking. US-listed shares of ASML fell after TSMC said the Dutch company's latest chip-making gear is too pricey to use. ASML's top lithography machines are valued at over $400 million apiece, and TSMC says it will hold off on deploying them through 2029 to save money. TSMC's choices have a wide-ranging impact on the chip industry since it's the largest buyer of equipment with the biggest budget for new plants and gear. Alphabet shares edged higher in New York after its Google Cloud division debuted new AI chips and tools for building agents. The lineup comes in two versions, one for creating AI software and the other for running AI services after they've been created. The company's pushing to make it cheaper and less energy intensive to roll out AI software. Tencent and Alibaba are reported to be in discussions to invest in DeepSeek. Tech news outlet The Information says the deals would value the Chinese AI startup at more than $20 billion. DeepSeek made headlines in January last year when it released its breakthrough AI model. The popularity of open source models in China has made it hard for companies to translate their AI advances into profits. Now you can get more on the biggest and the most exciting stories in tech on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech. That's Bloomberg Tech Asia and other shows on Bloomberg.com/videos. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching with that Philippine Central Bank decision as well as the Indonesia bank decision have been in focus so far this week. EMs have really had a bit of a mixed picture in the wake of the energy crisis, the ongoing war in Iran, and of course this now uncertainty over the ceasefire. Bank Indonesia had held its benchmark rate steady at 4.75%, saying though it's ready to do more to stabilise the currency, the rupiah, and the inflation outlook from the impact of the Middle East conflict that will keep intensifying both offshore and onshore intervention in the rupiah to support the currency. Governor Gio saying that he does expect the rupiah to appreciate, but inflation to stay within that 1.5% to 3.5% band this year and next. That bias for Bank Indonesia remaining neutral. No change to the policy rate is expected this year. To the Philippines, though, the central bank will deliver its rate decision later on Thursday. Economists are divided on the outcome. Some expecting a hike to rein in price pressures, others seeing a hold to support a fragile economy. Let's bring up Bloomberg Rates and Emerging Markets macro strategist Marcus Wong. Terribly difficult time to be a central banker, of course, and you can see strong arguments either for trying to get ahead of the situation or waiting and seeing.
Yeah, I think they are in a difficult situation. And, it's interesting, the Bloomberg survey of economists is actually evenly split, 15 calling for a hike and 15 calling for a hold. And to be honest, I can't remember the last time that I saw such an evenly split decision, in markets, especially in Asia, and especially for the Philippines. And you're right to say, they are caught in between a rock and a hard place. If you look at inflation, the most recent inflation print in March was 4.1%. It was the highest in nearly 20 months. Importantly, it's actually above the BSP's 2 to 4% inflation target. And another interesting thing to note is that inflation in the Philippines exceeded economists' estimates, and actually it's the only economy in emerging Asia that saw its inflation beat estimates in March. It goes to show the issues facing the BSP central bank. Of course, on the other hand, the concerns with growth are well known. There was a public works scandal at the fourth quarter of last year, which has actually spilled over to growth as well as growth expectations. So yes, you're right to say they are definitely caught between a rock and a hard place. If you look at, although economies are split, if you look at where peso swaps are trading, it's pricing about 20 basis points of hikes over the next 1 month. Essentially, traders are looking at about 80% odds of a rate hike, in a sense. So where we go from here is going to be an interesting decision to watch at 2:30 p.m. Hong Kong time.
Marcus, you mentioned growth there. We've had Fitch cut the Philippines rating outlook on growth. What do they have to say?
Yeah, I think they downgraded the outlook for Philippines. So it's all as you correctly mentioned, right? Is the part of the equation is growth. So as a result of public works scandal, the fourth quarter GDP came in, probably one of the weakest outside of the pandemic period. So again, BSP has mentioned that previously that they would like to look through all shocks because it is a supply shock situation. Central banks all like to say that if inflation is a result of supply shocks, it can be looked through. But BSP has also mentioned that they are closely monitoring the second round effects of the higher oil prices, and one of the ways is shown up is in transport prices in the Philippines. So again, growth has been weak. Although BSP expects it to accelerate, to rebound in the second half, that is something to in the future. But at this point in time now, BSP is really caught in the hard place.
I wanted to ask about your views on EM assets broadly. Are we likely to see more carry trades returning? There seems to be a dampening of volatility now after sort of the worst of what we saw as the impact of the war.
Yeah, I mean, that's a brilliant question. I think, we look, volatility has obviously subsided. I mean, if you look at other risk assets like, the MXEF, the MSCI EM stock index, even the S&P 500, it shows that, investors have looked past all concerns, and risk assets have, erased Iran war losses. I think in terms of carry, generally investors have been quite rather more bullish for higher carry. For example, the likes of in Brazil, in Mexico, where essentially the rate differential favors the carry trade. Unfortunately, in Asia, the currencies with the higher carry, such as India and Indonesia, they have their more idiosyncratic risk. And I guess it's fair to say that especially for the yieldier currencies in Asia, including the Philippine peso, investors have been less bullish over these currencies. So yes, I think you're right to say that the EM carry trade, part of it is back. But investors tend to go for those in Latin American economies rather than those in Asia.
All right, Bloomberg rates and emerging markets macro strategist Marcus Wong there. Thank you. Here's the top global headlines that we're following. US Treasury Secretary Scott Bessent says several Persian Gulf and Asian allies have requested currency swap lines amid pressure from the war in Iran. Traditionally set up between central banks, swap lines allow one nation to deploy the currency of another to address liquidity demands in that other currency.
Of our Gulf allies have requested swap lines. You would have just read about the UAE, and swap lines, whether it's from the Federal Reserve or the Treasury, are to maintain order in the dollar funding markets and to prevent the sale of the U.S. assets in a disorderly way.
2 CIA agents have been killed in a car crash in Mexico following an operation to dismantle a drug lab. Mexican President Claudia Sheinbaum says her government was unaware of their involvement and describes the operation as a breach of security protocols. Mexico is now threatening to escalate tensions with Washington, saying all security matters must go through the federal government. We have more ahead on the Asia trade. This is Bloomberg.
Li Zhen, chairman and founder of Chinese battery maker Gotion High-Tech, says he expects overseas growth to double this year. Speaking exclusively to Bloomberg, he also discussed expanding to the US and the impact of the war.
Actually, yes, there are some delays. For example, our exports used to be able to be shipped across the Mediterranean Sea, but now we have to go around the Cape of Good Hope, which definitely adds about half a month to the transportation time. Wars certainly have some negative impacts on our industrial development. We hope to end the war as soon as possible and restore peace. We also hope that the development of our new energy industry will gradually reduce or even eliminate the era of fighting for oil in the future.
So are you actively seeking to expand production in the U.S. right now?
Yes.
The IRA has come up with a compliance deadline by 2027 for battery components to be free of foreign entity of concern. Are your plants in the U.S. at risk of non-compliance?
This is an excellent question. Indeed, with the enactment of this legislation and other laws in the U.S., the requirements for domestic production in the U.S. are becoming increasingly stringent. This is understandable. A country simply wants to build its domestic supply chain system to ensure the orderly development of the industry and support the overall development of its economy. I think this is perfectly understandable. Now that we have established battery manufacturing companies, meeting this demand 100% is still very challenging. For example, there are some materials that the U.S. cannot yet manufacture, and we still need the guarantee of the global supply chain. There may be some increased costs in terms of taxation, but I believe that in the future, with the development of the entire industry, the construction of the supply chain system, the continuous expansion of market demand, government policy support, and considerable efforts, these problems will be gradually resolved.
What is your projection for domestic and overseas demand growth for Gotion this year?
Our growth rate will be 70% higher than last year. Overseas growth is expected to double.